them and that we can talk about them. I'll talk for about 45 minutes, and then we'll do questions after that. This is my favorite slide of this whole presentation stuff, because I feel like it's like if anyone's getting like heart palpitations or like sort of fear induced from seeing so many numbers all at once. I feel like that's similar to what people go through when looking at financials or trying to to understand what the financial information means, what it's telling them about the organization. It's something that does not come naturally to most people. So what we're going to do in this webinar is we'll talk about the basics of how you're going to encounter financial information, how you are going to be asked to communicate that financial information to either your board or to funders for grant applications or proposals, and give you some tips on reading financials so that you can actually make good use of the data that you're creating. A little bit about my background. I come from a background of running small arts organizations on the East Coast. We did a lot of grant funding programs, a lot of alternative program work. I also have a master's degree in accounting that I got so my mom would stop bugging me about not having a graduate degree. So these sort of two worlds of creativity and entrepreneurship and nonprofits, and with the sort of traditional boring numbers part, is something that has been part of my career for a long time. I've done a number of talks and education workshops with folks about financials, and I think that it's really important and gives you a really good leverage point, especially as you're just getting started. If you understand some of these basics and how to communicate in this world, you're going to be ahead of the curve there. And the other thing I would say is if we can, keep yourself on mute until we have questions. That way we can keep background noise limited. Okay. So I've, as someone who's been in this industry, I think that numbers get a bad rap, and I think that numbers are something that can be really helpful in, not only in nonprofit work, but in all of the work that we do. Numbers help us make decisions. I mean, numbers are things that, communicate data back to us, and that we can use those, compare them to other numbers, and then make decisions about how to move forward in the work that we're doing. I think numbers are great because they're unbiased. I say a lot of times you can't be mad at a 4. The numbers are there just to communicate to you, and they don't really, exist to, they don't respond to feelings. They're just communicating unbiased information, unemotional. Again, it's not something that it's not a emotional based decision. It's a completely rational system, right? So 2 + 2 is always going to be 4. 5 + 5 is always going to be 10. The system and the numbers are going to work the same every single time in every situation. They're transferable. It is sort of like a common language of communicating business activity. So, if you're speaking Spanish or speaking English, it's hard to communicate, but distilling information down into numbers, you can start to communicate between different industries, if it's retail or nonprofits, or if it's a, health and human service nonprofit versus an arts organization. Numbers are a way that we can sort of distill down and have a ability to communicate and share information among different industries and different organizations. When used in their best form, numbers tell a story. I mean, once you've done a lot of this, and as you get more comfortable looking through financials, you'll be able to see what happened in the history of an organization just based on how the numbers look. If numbers are so great, then why is it so complicated, especially in nonprofits? Numbers and financials tend to be really complicated in nonprofits, and there's a couple reasons why that is. Nonprofits, from an economic standpoint, they don't make a ton of sense, right? You were raising money from one population to support a different population with hardly any ability to communicate metrics, to communicate, if you're doing your job well, right? I mean, you can't put a price on the life of a child, that sort of thing. That makes it really difficult to operate in a nonprofit as running a business or trying to do an organization that improves over time and is able to sort of grow its impact. Nonprofits are intentionally biased as opposed to where, in normal number systems, nonprofits exist to fix something that's aberrant in the community, right? So if, let's say, you're working on homelessness issues, that's sort of a systems failure that then we create a new system to try to help augment it, right? We're running these organizations with the intention to do something specific, and that inherently makes us biased in these organizations. It's super emotional, right? Fundraising is based on your ability to create heartstrings in the person you're raising money from, not necessarily if you're doing your job well or if you're putting the money to good use. It's not rational. Again, you've got, money comes from somebody, most of the time, old rich people who made money in, industries, or let's say in airlines or in engineering, and then that money somehow gets redirected to be put to use in educational programs or after school work or something like that. It's really difficult also in nonprofits to communicate between different industries or different types of nonprofits, even different organizations working in the same sector. It's hard to communicate between, or to sort of flatten things out and say, okay, the United Way is going to produce this much value for my money, or the Red Cross is going to produce this much value, or this small startup that just started is going to produce that. Everything is sort of, there's a real estate metaphor that, nothing is ever bought, it's sold. So nonprofits, I think, are, embody that. It's a sales-based environment, which inherently creates difficulty in just understanding, looking at the numbers and seeing what they mean. It's never that simple. So that's why I like to spend time on this, because in an environment that is so challenging from an economic perspective and from a trying to grow and be better over time, financials are sort of the best numbers we have, and they can't solve everything, but as we as an industry continue to work towards better metrics to understand the impact of our work, better sort of evaluation tools, a lot of it defaults back to the financials, because those are the best things we've got to work with are the numbers that come from financial operations in our organizations. So that's why I like to spend time on this. That's why we've got two different webinars about financials. This one, we'll talk about basics. We'll go over structures of basic financial statements. And next week, we'll talk more about budgeting and forecasting and sort of how to use numbers to tell the future. Okay, so basics, we'll start with some terminology things. And a lot of these are words that, for the most part, we already know. We've heard them before. Cash, of course, is money that's in your bank account or in your pocket. Assets is probably one you've heard. This is something of value that is going to, create value over time. So like a car would be an asset because it's going to provide value for the organization over a period of time. Liabilities, these are debts, basically, things that you owe to someone else. They can be in the form of actual, like a credit card bill. They can be in the form of loans that are due in a long period of time. They can even be in the form of work that you have promised to do for someone that you haven't done yet. You have a sort of liability or an obligation to expend either cash or assets to achieve an outcome. Income and revenue, these are sometimes used interchangeably. We'll also talk in this presentation about different terminology between for-profit language and nonprofit language. Nonprofits have some specific ways that they like to talk about it. I usually default to more to for-profit language because I think it's easier and I think it's more clear when we talk about, income is it's more clear in communication. But I'll give you some of those examples just so you can sound smart when you're talking to your board or talking to other organizations. But income revenue, this is money that you make from doing something, right? So money you make from a program, money you make from a donation. Expenses is the other side of this. This is money that you are spending on, doing the work or running the business. Net assets, this is where it gets a little bit tricky. This is sort of like what's left over at the end of the organization. So you've made money, you've spent money, and then whatever's left we call net assets. This is the net amount of assets that you have in the organization that can be disposed of to do, continue doing the work, continue running the organization. In for-profits, it's called retained earnings. I don't know, these, between these two, I feel like they're both sort of confusing terms. But it is everything, all of your expenses and all of your revenues added up from the whole beginning of time until now. And the difference between those is what's left in your organization. In nonprofits, what we call net assets. Okay. Any questions about these just basic terms? Okay. Second part of basics that we'll talk about are the basics of financial statements. In almost any case that you're working on, there's two main financial statements that you'll be asked for, either at board meetings or when applying for grants, when reporting to the IRS. They've got their own sort of version of this. There's two main ones. First one that we'll talk about is called the balance sheet. In nonprofits, they use this term. It's called a statement of financial position, which is a lot longer than balance sheet, and I feel like not as clear. So I like to just call it balance sheet. So balance sheet is a statement that shows the current financial situation of your organization. It is a statement that focuses on assets and liabilities rather than income and expenses. It is a cumulative statement that runs from the beginning of time up until a specific date, right? So the balance sheet is how you will say, today, January 11th, I've got $5 in the bank, I owe someone $2, and I made, $3, over the course of the organization. Balance sheet is a current financial picture showing the health of the organization and what the organization has at its disposal to continue to do the mission work and to continue to run the organization. And balance sheet looks like this. So balance sheet as of a specific date. So if it was today, or if it's, I'm sure a lot of you, if you've got activities for last year, you're preparing statements at December 31st. Balance sheets are always structured like this. At the top, you have your assets. Again, these are things like cash, cars, things like that, things that are of value that can be either provide value to the organization or things that can be converted into cash is an easy way to think about that. So a car you could sell and turn into cash. A debt that someone owes you money will eventually turn into cash. Those are assets. They're always at the top. Then the second part of it is the liability. So all of the amounts that you owe to other people, and the result of that is the net assets of the organization. So everything that's left over after you take all your assets, subtract all your liabilities, what's left is the net assets you've got in the organization. And they look something like this. The reason it's called a balance sheet, of course, is because there's a number in here that balances, right? You take your total assets are equal to your total amount of debt, so your total amount of liabilities, plus the net value of everything accumulative from the beginning of time until now. Those numbers will always balance, right? Because the net that's left over after you take all your assets and you subtract all your liabilities, the net that's left over is the net value that you've got in the organization that will provide you resources to continue to do mission work and run the organization. And these numbers, is a math equation. Again, this is back to this sort of rational system of math that, one of the reasons that I like numbers is because these numbers will always match. In our financial systems, they're set up so that that a balance sheet will balance, and you can count on it to always balance. If it doesn't balance, then there's something going wrong in it. But this is sort of basic structure of how a balance sheet looks. Any questions on balance sheet? Okay, great. The second major financial statement you'll see is an income statement. This is, I feel like, the more common of the two. Its weird nonprofit name is the Statement of Financial Activities, which is, I think, a little bit more descriptive than the weird name for balance sheet. But again, I still like to use for-profit terminology in talking about it. Income statement is a financial statement that shows all the money you've made, subtract all the money you've spent over a period of time, and then how much money net did you make from that. This is, again, I feel like a more common one than the balance sheet. It's more like a live feed of what's happening in the organization over a period of time. So as a balance sheet looks at, as of this date, here's what happened from the beginning of the universe until now. This is what the organization has at its disposal. Income statement is over a period of time, right? So usually a year, sometimes a quarter, sometimes a month. But how much money did we make? How much money did we spend? And then what's left over during this period of time? And that's why it's more like a live feed of a financial statement or of the organization. It has math in it too. The income statement, the basic format of this is, you define your dates. So if it's going to be January 1st through December 31st, we brought in, $1,000. We spent $500, and our net income then was $500, right? This net income, again, is the for-profit term. Change in net assets is what they call it in nonprofits, just so that you're aware of it. Again, I like to just call it net income. But it'll look something like this. So in a financial statement, an income statement that ran from July 1st through June 30th, which is my birthday. I hope you all remember that. We brought in this amount of revenue from grants. We spent this much in expenses. And we had net income $300. So very basic income statement, money we made, money we spent, and then what's left over. These two statements are related. In nonprofits, it's sometimes harder to see how they're related because we, on our balance sheet, we tend to split out our restricted money and our unrestricted money, which we'll talk about in a second. But in for-profits, it's really easy to see because this would be how a balance sheet would look in a for-profit organization as of June 30th. You see the net income number in the bottom section? That's how these two statements tie together. Because if you're talking about the same time period, at the end of this period, these two statements are linked because you report all the money that you came in, because this ultimately is going to become part of your net assets, right? Because it's money that's left over after you did all the things you were doing in a period of time, that then either adds or subtracts from the net balance that you've got left over to do your mission work or run the organization. Okay, how are we? Are we overwhelmed yet? Okay, I hope not. So from this sort of basic high level, it on a sort of big picture angle, balance sheet, income statement, those are the main things that you'll see. They're fairly easy to read once you get the hang of it. At most of your organizations, because you're either small or just getting started, those statements are not going to be that complicated, which is great because you've got other more important work to do than figuring out how to be a financial wizard. But I do want to talk about some of the ways that it can become more complicated uh, than looking at statements on that sort of simplified level that we just looked at. The first of this is class-based financials, and I think this is like a next level financial superstar thing that you can do in order to really understand the different financial impact of different programs, different fundraising activities. And as you grow up as a nonprofit, the IRS likes you to think about your financials basically in three big buckets. So money that you spent on programs, money that you spent and raised in fundraising, and then money that you spent running the organization. So in addition to an expense or a revenue being like a revenue, could be a donation, it might be a donation for a program. So it's another level of, I think it's easy to think of them as adjectives. And I always, in my brain, I'm always thinking about it as adjectives. You've got a dollar amount, and then you've got that dollar amount has a number of adjectives that go with it. It is a revenue is an adjective. A donation is an adjective. One of these classes is an adjective. So it's ways that we can further sort of split up the financial information so that we can really understand in a more deep and more intentional way what's happening in our programs. Does our after-school program make money? Does the Thursday program make money, but the Tuesday program loses money? Then we'll know, okay, let's spend some time thinking about the Tuesday program. Why does that make money? We have, maybe we've got less revenue in there. So class financials are how you can sort of really start to dive into specifics of, the outcomes of the organization and how to tweak those and how to do those better over time. And as you grow, once you get to a certain point, the IRS requires you to report this way anyway. So I think if from the beginning you can start to think about it this way and think about that there are different levels of adjectives in financial reporting, it'll really put you ahead of the curve. Cash versus accrual is one that will come up. There is always a board member. Every time I've been presented information to the board, I would say 80% of the time, there's some board member that says, is this cash accounting or accrual accounting? It's basically two different philosophies of how to report financial information. Cash basis is kind of like how we run our normal lives, right? You've got money in the bank account, you spend money. If it's in your bank account, that's when it counts as money. So cash is, revenue counts as revenue when it's cash, when it's in the bank. Accrual is a theoretically more correct way to look at financial information. Accrual accounting says that when an obligation is created to give you money or for you to give money to someone else, when that obligation happens is really when the number matters. So if someone says, I'm going to give you $5,000 in June, you would report that $5,000 right now, as soon as they said it, because even if you don't have the cash yet, you've got an obligation or you've got, an amount that's due from somebody, then that's when it counts as a revenue and counts as on your balance sheet and on your income statement and things like that. Accrual accounting is the more correct way to do this when you are a large organization, because then there's all these other little wrinkles that happen. There's a whole world of depreciation, if you've heard of that. That's where you take a value, instead of having an expense all happen at one time, you sort of split it out into little tiny expenses over time. I think, and here's some examples. So accrual examples, receivables, that would be we're going to give you $5,000 in June. A payable would be the opposite. I'm going to give somebody else $5,000 in June. Depreciation is taking a big chunk of expense, like if you bought a car or you bought something that's going to have value over time, and you split the expense into little pieces that match up with the value that you're going to get over time. Deferred revenue, I don't know why I have that one on there. That's pretty advanced, and it's money that you've earned but you haven't gotten yet is basically that's what that is. Tiny operating house. In my experience of doing this for a long time and with a bunch of organizations, and how we've built our software platform that helps folks manage all of this financial stuff and all these details. I love cash basis financials for small organizations. I think that it's much easier to understand what's happening. I think that small organizations don't get a lot of value of making things more complicated from an accounting perspective than they should. And folks who are just starting organizations, again, have got better things to think about than, how do I do all these accounting tricks or things that, financial people like me invented 100 years ago just to keep ourselves in business that, they kind of make sense, but it's overkill at this point. You are trying to save the world, trying to save the whales, save the puppies, and your financial information should come easy and be able to support the decisions you're making, and not cost a lot of money and be too complicated. So just something to think about, in terms of personal preference. Another wrinkle that comes up a lot, and is a way that, or something that I've seen become problematic for a lot of organizations, is this idea of restricted funds versus unrestricted funds. This is a unique thing to nonprofits that for-profits don't have to deal with. If a donor gives you money for a specific purpose, then you have a legal and a fiduciary responsibility. Fiduciary just means money-ish, right? Fiduciary, it's just, money type, a money-based responsibility to spend that money on what you said you were going to spend it on. So if somebody gives you money for a specific program or a specific event, as a nonprofit, you've legally got to track that money separately so that you can make sure that you really only did spend it on what the donor gave you the money for. Unrestricted is just, you can spend it on whatever you want. Like, you made $1,000, you spend it on a computer, or you spend it on salaries or consulting fees or rent. Unrestricted money you can spend however you want to, but restricted, you do have this obligation to track it and to report back to the donor. Grants, this is super common in grants because granting organization is giving you money for a specific thing or to pay for a specific thing. So your financial system and your thinking about financials needs to be able to track these two things separately. And if you get this, it's sort of one of these things that needs to be part of your DNA as you're running a nonprofit, because it is such a common pitfall that you'll really do yourself a service to kind of come out of the gate thinking and understanding about these two things. What very commonly you'll see, if you've got $5,000 in the bank, it feels like you've got $5,000 to spend on whatever you want. But if that $5,000 is spoken for, right, or is supposed to be spent on something else, then you really can't spend it on whatever. And so understanding what money you have that's free money and what money you have that's already spoken for, is super important and super just kind of a through line of all nonprofit financial world. So it's something to get, that's good to get comfortable with now. Any questions on that? Okay. It can get infinitely more complicated from here. I think that those are the most common complications that you'll run into. The class financials, asking about if it's cash accounting or accrual accounting, and then understanding the difference between restricted funding and unrestricted funding, I think are the most common complications. Again, it can get much more complicated. What you'll probably run into, at the sort of startup and small level, it won't be too much more complicated than that, or it shouldn't be. If it gets much more complicated, then maybe you're doing something wrong, and you can set up an appointment and we can I'm happy to help you kind of think through what's happening. Okay, any questions about the wrenches or any problems? Anything else you've seen that you have questions about? We can do this at the end too, but uh, right now we'll move into some ways that you can make financial information more helpful for your organization, and sort of put this data to use for you. Reading financials is sort of like a language, on its own. Like we looked at in that beginning slide, when you see a ton of numbers at once, it's hard to interpret them or understand what they mean. I feel like it's either like you can hold 7 numbers in your head at one time, and that's why phone numbers are 7, or maybe that's wine. Maybe it's you can have 7 flavors or something like that. Anyways, you can't think about infinite numbers of numbers all at once. So some ideas to think about, when you're looking at a financial statement, you've got 60 numbers on it maybe. The thing that actually matters is the distance between numbers, if that makes sense. That sounded a little hippie as I heard myself say that. But the distance that numbers are moving is what's really important, or the distance, between numbers on the same column. A 4 could be a small number, or it could be a giant number, depending on how it relates to other numbers in a financial statement. So reading financials, the first thing that I'll do is I'll look at, where are numbers going from a small number to a big number, if that's, across columns, like it's in different, time periods. If it's vertically, like different types of expenses, like we spent 4 on office expense, but we spent 10,000 on consulting expense, then I know, okay, so I'm not going to care so much about 4. I'm going to focus on the 10,000 because that's bigger. And I learned that by seeing how the number relates to other numbers. We do, especially with income statements, you look at numbers and changes over time. So how fast are numbers changing over time? And again, the relationship between numbers is what's really important in looking at financial information. It's also overwhelming to try to look at it all at once. So you'll actually find, and if you have a financial statement to look at, I'm going to share a sort of sample financial as part of the template thing that at the end of the presentation. But if you look at, even if you like use your hands to like cordon off a small section of a financial statement and really read the words, you'll find you actually know a lot more than you think you know. You'll start to see words like cash, and you'll start to see words like assets, and automobiles and things like that you can either, even if you haven't heard the word, you can sort of use context clues to figure out what it's talking about. So, it's always good, until you get comfortable reading and understanding financial information, to start with small pieces, understand what that means, move on to the next small piece. And if you do that, you will find that you know more than you think you know. We live in a very financial, businessy world. So even if you haven't really done this before, you'll see that you really do kind of have, you know more of this than you think you know. And it takes time. It takes time. It takes practice. I've looked at 80 bajillion financial statements in my life at this point. But it's something that you'll get better at. Just like you read faster. From when you were first starting out. And the time that you invest in this is going to be something that becomes an asset for you, for the rest of your career and the rest of your time running this organization. Some thoughts on preparing and presenting financials. One of the hard parts about being in a small organization or a startup organization is that you are probably the one who has to prepare the financials. You don't have an accountant person to do it for you. So I wanted to talk a little bit about some things that are important to consider and things that I think, that I consider a lot when I'm preparing financials, so that you can help communicate this information better to your board or to grant funders, whoever you're providing information to. A lot of financials and financial statements in their presentation, a lot of it's aesthetics, right? So how the numbers look is actually really important, because the financial statements are a tool to communicate information, right? So if it's the font is too small, or it's cut off, the page is cut off in a weird way and you have to flip back and forth, or the columns aren't numbered so you don't know what they are, all of that makes the information harder to understand. So I'd like to focus and reinforce the idea of aesthetics as part of your job in presenting financials. How the numbers look is important. I have been a young person presenting financial information to boards of older people, and the first 5 years of my career doing that, the feedback that I always get was the numbers are too small, because older people can't see the numbers as clearly as a younger person. This is what I'm told. So considering how they look is really important. As an example of this, I'll show you this. So these two columns, on the left and the right, these are the same numbers, but the one on the right looks so much cleaner and so much easier to understand. And that's because we did things like, I took out a lot of the dollar signs. We don't have dollar signs on the right one. I took out all the decimal points. I don't know, unless you're doing something scientific or percentages, maybe, I feel like decimal points are not worth worrying about. They add a ton of extra numbers. And then, down here, we've got just a little piddly amount in other expense. In a situation where I'm looking at $2,000, I could not care less about 35 cents. So I put it in the right column. I put it up in, I don't even remember where I put it, probably office expense. But these two things you can sort of start to see as an example how much cleaner they are when you consider the aesthetics of what the numbers look like. The column on the right is actually 48% fewer characters than the column on the left, which is not even true, because it's actually 47.5% characters, where you take out the decimal points so that the information is easier to communicate, right? That's an accounting joke. You know how hard it is to make an accounting joke? Anyways, so something to think about in considering when you're presenting information. How it looks is going to have a big impact on how it's interpreted and how it's understood. Math is important. Nothing derails a meeting quicker than two columns that are supposed to equal each other that don't, because now, instead of talking with the board about how you need their help raising money or you need their help volunteering at the event, now we're talking about why does this number not equal that number. So I even presenting stuff from the computer, I'll go through and add the numbers up on a manual calculator just to make sure that I'm not missing something, or there's not like a hidden row in the spreadsheet, or I forgot to print a second page or something like that. So it's a good double check to do. Allocations, this is sort of like the class financials we talked about. Presenting information in different ways can help understand and inform different decision-making processes. Allocating expenses across class is really sort of a next level thing that even larger organizations are not into, but it really does help you understand how much did I spend on this event, how much did I make from this program, if you allocate different expenses or different revenues to different adjectives. This is sort of like aesthetics, considering the audience. Who are you talking to? If you're reporting to board members, they're going to need to see one type of information. Board members don't need to see staple expense and paper expense. They've got bigger things and you need their help in bigger ways. So how much detail do they really need to see? The same thing in presenting financials to grant funding or applications. How much financial detail do they really need to see? And it's usually not as much as you think. I find a lot of summary, high-level financials work just as well as detailed financials that break down. Because again, you want to this is a game of communicating information and a game of sort of, especially with grants, you want them to do something with the information, right? You don't just want them to have it. Even with the board, you want to give them information so that then they help do something, right? So considering with the audience and also considering the outcome that you want, numbers, you are, of course, have a fixed way of, you can't just make up new numbers. but how you present the numbers can have a big impact on not only how the information is received, but how um, you know what sort of outcome comes out of that. So, what do you want the audience to focus on? Um, a few examples. If say you didn't raise as much money as last year, this is what you want the board to see. You know, this would be something like, okay, we didn't raise as much money as last year, so I need y'all to give me more money this year so we can make up for that. Then you would show them, right, comparable financials that show 1 year versus the last year. So then you can create that narrative and create that insight so that they can see, oh, last year was 2, this year is, 1, or whatever direction we're going. Then you would show them and you would present the information in a different way based on what takeaways you want them to come away with this. Let's say they're not giving fast enough, or the board giving is below projections. Then you'd of course want in your revenue section to have a line item for board giving, right? Instead of just lumping everything together as donations, you'd want to split that out so that then the board can see, oh, now I can understand that, versus if it were all buried in a different way. You're not going to communicate that same information. And this is when it really gets into sort of, bigger picture, using financials to tell a story sort of thing. And you can do so much with that just in the presentation and how you show the numbers. You can do it with program financials too. There's a lot of examples. If you want to start to shift away from government grants, you can show, percent breakdown between things. You can add columns too, like if you want to show percents, sometimes that's helpful. And you can even pull in information from other sources to help tell that comparability story, if that's where you're trying to go. And again, in considering the audience, board rarely needs to see all the details. You've got more important conversations to have with your board than, why did you spend $22 at Office Depot when you could have gone to Staples? Like how the information is presented really controls how the narrative happens, and is a great tool for controlling how meetings flow and how conversations unfold. And we assume that board members know what they're talking about. It's, as an industry, we have a really poor pipeline of board members. It's one of the reasons that I love to focus on small and startup organizations, is because I imagine collectively, even in this chat room, there are 20 board members who have never served on a board before that are getting their first experience with your organization. And I think that provides a huge and great opportunity to educate board members about what they're supposed to be thinking about, so that, in 20 years when they're on a different board, or in 10 years when they sort of move on, that we are kind of adding to this pipeline, especially in diversity. I mean, there's so much more cultural and other diversity elements in smaller organization boards. So some of it's your job as you're going through this to, you're kind of working with the board to educate them about what they're supposed to do, while at the same time giving information to them so that they can help you run your organization better, and reach more people and do more of the good work. Okay, any questions about any of that? Sort of the end of my presentation. There's a couple ways that Tiny Opera House, our organization, can help. We do webinars and workshops like this. We're in part of an 8-week series right now of what is hopefully, a kind of big picture of all the things that you're going to face as someone running a small organization or running a brand new organization. We'll talk a little bit more about financials next week, in terms of budgets and forecasting, and how we can sort of use the basics and what we learn in terms of the kind of the structure that we're trying to achieve, how those can kind of be put to work to run the organization in the future. There's a number of templates. We've got budget templates. I'm going to share with everyone in the follow-up just a kind of financial reporting template if you want to see an example of what a good financial report structure looks like. If you're depending on what sort of financial system you're using, it may look different, but how I like to set it up when I'm presenting information to boards and the different views that I like to convey. Um, there's also a part of our website you can sign up for what I call office hours, and I do them Tuesdays and Thursdays, and you can make an appointment for 20 minutes for free, and we'll talk about kind of whatever you want to talk about, if they're financial issues or accounting questions or marketing, program, fundraising things. I'm happy to share ideas. I've done this arc of starting and running an organization about a half dozen times, so I'm happy to share kind of what I've learned. And as you can tell from this webinar, and if you were here last week, the information that I'm going to talk about and how I'm going to talk about it is designed to be very tailored to what I think you're going through. There's a lot of nonprofit training that is too fancy. It's like too advanced for what it looks like sort of when you're on the ground and you have one person and you've got to build your own website and do your own press releases and things like that. So all of these webinars and all of these consultations are have that sort of through line of how the information occurs. I think it's really important to start to build community around people like you who are have stepped up to say, I'm opting in to do this work because I think it's important. I think I can be the one to do it. Whether you're in arts education or mental health or animal welfare, there's a commonality of sort of spirit and of purpose, I think, of folks who are starting and doing this work. So I've done a couple. We have like a closed Facebook group that doesn't really get a lot of attention to it. So I'm always thinking about like how can we better build a community so that we can learn from each other, and that you can feel and realize that even if you're working sort of independently in your community, that you are part of a bigger conversation than that you are not alone in doing this work, I guess is sort of a cheesy way to say it, but there's thousands of people. Literally, there's 5,000 new nonprofits every month in the country, somewhere in the country. 5,000 new organizations, which means 5,000 people who are trying to figure this out just like you are. I think it's important to build community around that. I haven't really figured out how to do it yet, but we have a forum that is starting to help with that. If you haven't seen the software platform that we built, it is the thing that it does best is keep track of all of these financial details that we just talked about, from restricted grants to the financial reports. It makes it really easy to build them because it's all question and answer based. So even if you don't know anything about accounting, the reason I built that is to save you time and having to think about it, save brain stress of having to worry about how do I build financials, how do I present information to the board. It's really, really easy to use. It syncs with bank accounts, so you don't even have to do any data entry like you would do in a QuickBooks or something like that. And it's only $10 a month, so it's designed for people that have super limited budgets. If you haven't checked that out, I'm happy to set up a time to kind of walk through that with you. I might show a little bit of it next time, but you can get to a demo version of it from our website, tinyoperahouse.com. But if you haven't started keeping track of all these details or using some system for that, I think it's great. I'm biased, of course, but we've got a couple dozen folks all across the country who are using it, and it's helping them spend less time trying to figure out how to do the financial piece and more time figuring out how to do the mission work, which is so important. But yeah, Calandra uses it. She says it's easy. It's a testimonial. I think Calandra, I put you on the website saying something about it. Great. Okay. Next week, the part 2 of this financial focus, where we talk more about budgets and cash flows. These are kind of the big problem with financial information is it all happened already, right? So by the time you get an income statement, it's in the past. So next week we're going to talk about how to use those same principles and that same energy on projecting what you think is going to happen in the future, so that you can plan, that you can know how much money you need to raise, know how to engage people around that. Which I think is really important. I love talking about budgeting. Budgeting is I think strategic planning is my favorite part to talk about. Budgeting is great because it is just sort of like a really numbersy version of a strategic plan, but a good budget really helps keep you on track, and I think also really helps you know what to do with your time. Which as someone who's done this before, and even in running Tiny Opera House, it is a startup, and on Thursday at 2:00 in the afternoon, sometimes I sit down and I think, okay, what do I do now? Like, I don't. What's my plan? Like, it's budgeting and projecting stuff help you understand kind of what to do next, and help you see the sequence of, if I want to get here, then I need to start here, which means tomorrow I need to be here. Anyways, okay, so now let's do questions. You can put them in the chat window, or you can just turn your mic off and we can talk about them. Again, I'm happy for you to be specific about things, so that if it's a question that you have or something that you're going through, there's probably another person that's going through it as well. Before we do that, I'm going to put up my contact information in case you want to get in touch with me through email or something like that after the webinar. Yeah, for now, if you've got questions, I'm happy to answer them. So classes for grant. So this is like in a QuickBooks environment. So my personal preference in setting up QuickBooks is hard, and one of the reasons that I wanted to build the Tiny Opera House is that QuickBooks doesn't really like to do nonprofit work because it doesn't have the same, it doesn't have adjectives in the right places, right? So you can use classes to track grants, but then you're sort of stuck with them forever. I personally like to have, let's say you got money from Bank of America. So Bank of America would be a customer in QuickBooks, and you can actually set up a sub-customer in QuickBooks that would be under Bank of America. And I think that's the best place to track grants, because then you can say Bank of America grant 2018. You can still use that to drive, financial reports, because you can select it in your filter options. But then it also doesn't show up all the time. If you put it in classes, you're going to have to look at it every time you do a transaction and find a class, even if the grant happened a million years ago. And the sort of spirit of the grant is from a organization, and where you put the from organization adjective is in that customer feature. So it also kind of keeps consistency with that, because then you can run a financial report to see what is the total financial impact of Bank of America, including the grant and including the fees that we pay to them and including this donation that they made. You can sort of see a whole picture of how your organization is benefiting from that relationship. Welcome. Anything else? Any other questions that folks have? Okay, well, thanks again for being here. My contact information is up here. You'll get a follow-up email, and then we'll do this webinar at the same time next week. If you've got questions that come up, or if you want to take a look at how the Tiny Opera House platform can help keep track of all of this, just shoot me an email or make an appointment on the website. And again, thanks for being here.